Welcome back to another episode of Right Here in Mass. Joining me today is Joshua Summers, co-founder and CEO of EnFi. Joshua is a visionary entrepreneur who has carved a unique path in the world of business. His journey began in financial services consulting, where he honed his skills but soon felt a deep-seated desire to become a builder of companies. Embracing this calling, Joshua embarked on a journey of entrepreneurship that has seen him become a prominent figure in the industry. Joshua, welcome to the show.
Thank you so much for having me, Ashley.
It's my pleasure. For our listeners, Joshua's impressive bio and full history of his career will be in the show notes. But Joshua, I'd love to give you the opportunity to start off this podcast by sharing with our listeners who you are, what you do, and what led you to where you are today.
Happy to do that. And first of all, I think you did an amazing job with giving a little bit of a preview there. I'm going to steal some of your sound bites for future conversations. Look, I'm an inventor. I'm an entrepreneur. I like building companies. As you said, I started off kind of honing my skills in the consulting world in financial services. It allowed me to develop kind of this approach to thinking critically about a problem and thinking about how I could potentially solve it. And that's really the root of entrepreneurship, is being able to think of a problem that exists in the world that you want to go out and solve. And so that shaped kind of where I went from there. I was early on in the .com era, and being a consultant during that time was a wild ride, a really exciting journey. But it all came crashing down. And at the end of that, we had decisions to make. Do we go start new companies? Do we go try and get jobs in a difficult job market? And starting a new company actually was easier than going and trying to find a job. So thus kicked off my entrepreneurial journey. I went through a kind of early learning experience of trying to do consulting again at a small boutique consultancy, and did that for a number of years, and then decided I was done building products for other people that I didn't have to live with the outcomes of. As a consultant, you have this great ability to build something magical and build something new for every client, but then you don't know what happens after you walk away from that client. And I just wanted to feel like that next stage. It was really important for me to say, how do we build a company, not just a product? And so with that, I started launching a series of startups, of all places, advertising technology. Ad tech is a very, very interesting world, the world of media. And it was going through a pretty interesting period of this move into mobile at the time. And so traditional advertising, billboards, television advertising had migrated into this world of digital advertising, and then migrated even further into this mobile experience. And I happened to be lucky enough to ride that wave. And so I started a company which was really through acqui-hire gobbled up by a better startup than us. And I got to play a big role in helping them shape that startup and building out their advertising technology, a company called where we developed one of the first mobile ad networks at scale. It did really fine-grained location-based advertising. We built that up from the ground up, like no tech to building all the various components, inventing along the way, making a ton of mistakes, but finding some really good traction, and eventually sold that company to PayPal in 2011. Really, if you're an entrepreneur and you haven't been through an exit, like it's this unbelievable experience where everything you've worked so hard for, everything you've built, all the blood, sweat, and tears culminates in this experience of like this rapid, fire, kind of everything's changing moment to moment. And then if you get to the other end, if you land the plane, it's this magical thing that you've done something that very few people have been able to do. And so it builds this relationship with all of your coworkers where I'm still like really good friends with all of them. And this like camaraderie amongst other entrepreneurs who have been through this shared experience. And it creates like this drug-like effect. You've now figured out how to go from day one of a company to finding product market fit, to building customers, to scaling your revenue, to finding an exit where you build value for someone else. And that's just an amazing journey. And so I stuck around PayPal for a little bit after that exit, and then decided I wanted to do it all over again. They say a serial entrepreneur is a serial glutton for punishment, and that's me. And so we, myself and another coworker of mine, Doug Hurd is an incredible early stage operator. We decided to start a company doing something very similar, but in the old world of television advertising. And so we wanted to bring more data into the process beyond traditional Nielsen age and gender to allow advertisers to find better audience for their ads and to allow media owners, the national programmers, to monetize their inventory with the optimal yield, get the most out of their inventory possible. And we built this incredible team and this incredible platform. We raised over $50 million from angel investors and then from VCs and then strategic investors in the United States and Europe. And that was another wild ride and an exit where we sold it to AT&T in 2019, about 3 months prior to the pandemic hitting. Which I would like to say we just nailed it. We planned everything perfectly. It ended up exactly how we thought it would. But oh my gosh, like you couldn't have gotten luckier. And we certainly got lucky on timing. And we were fortunate enough to find a home at AT&T. And the team went and started integrating into a larger advertising technology play that they were going after. And I stuck around for a year, but it was pandemic time. And I realized I hadn't spent a lot of time with my children or my wife. And it was a great time to step back and take a break. And so I did that. And in doing that, I realized I'm not very good at taking breaks. And so with a half a dozen other incredible operators in the Boston area, we came together and launched TBD Angels. TBD Angels is operators investing in operators. It's a really incredible platform for first-time angel investors to experienced angel investors to collaborate and inject money back into startups and provide them with a little bit of additional, we've been there, we've done that, we've made that mistake before experience to help them find a better outcome. That group is now almost 300 members spread all over the United States. It's invested in 85 different companies, put over $10 million, maybe $12, $13 million at this point to work. And it's been a wild learning experience for me. I don't know if I'm anything good in terms of an investor. I know I can do the other side. I can build companies. I can find outcomes for them. I don't know if I'm any good as an investor. Give me another 10 years. We can talk about it then, and I'll tell you how it went.
Yes. And so now you're the co-founder and CEO of EnFi. So let's talk about that.
Yeah, so fascinating. I thought I was done starting companies. And I was really enjoying the investing side and enjoying time with my kids and my wife and remembering how to be a member of my community. And then there was a really interesting triggering event for startups in the industry. There was the day where Silicon Valley Bank started to falter. And if you're an investor in early stage startups and you have any role in the way that that startup is capitalized or grows, you have to work with Silicon Valley Bank. They power a lot of the startup ecosystem, whether they bank there, whether they get debt from those bankers. They're not the only player. There's also First Republic, who had very similar struggles at the same time. And so you had this cataclysmic event happen that started to change banking for startups in general. Billions and billions of dollars at risk that had to be dealt with. So we got all these panicked calls like, oh my gosh, Josh, my money's at Silicon Valley Bank. It's everything we have. What do we do? And so myself and a handful of other investors through TBD, companies I sit on the board of, we started calling in every favor we could at every bank we knew. Help us open an account in a weekend. This is happening. We need to get the money out in the next 24 hours. In a bank run, you don't want to be the first jumping ship. You really don't want to be the last. And so we did everything we could to help our investments, to help the companies that we were advising, to help the companies we sat on the board of move their capital. And it was a really decent process. Like banks came together and they were like, we can help. And like they got rid of processes that stood in the way and they moved mountains. It's not actually easy to open a bank account as a commercial business. It's actually surprisingly hard. But they made things happen in a very short period of time, and we were really thankful. There were a series of companies we couldn't move their money. And it came down to one common trait across them. They held debt at one of those two banks. And if you hold debt at a bank, there's usually something called a covenant that exists on that debt that describes a set of guardrails you have to agree to around how you operate, what your money is, where your money's held. And so one common covenant is if we're going to lend you money, you have to keep your money at our bank. And that's really important to the bank because their primary source of repayment is your cash in the bank. So if they need to, they can go ahead and pull some of that cash out. Those covenants meant that these accounts couldn't be moved. And so when the dust settled, the government fixed things, like it was a crazy experience. I stepped back along with a couple friends of mine in TBD Angels, and we started talking about this experience. And we said, what can we learn here? Like what comes out of this? And we were like, wow, there's so many interesting lessons, but one of them is covenants. Like, what is a covenant? As an entrepreneur, I've taken debt from those banks. I've also taken debt from private credit companies. And they have different types of covenants that exist. Some of them are, you have to give us a reporting at the end of every quarter that tells us about how your business is functioning. Some of them are, you have to maintain a certain financial ratio calculation on your assets versus your liabilities or other types of calculations. And if you don't maintain those, you are in violation of these covenants, and therefore certain things happen. Maybe the bank recalls the debt. Maybe it just means you have to have kind of more conversations with the banks. Banks don't want to actually take the debt back. They want to help you get to the other side of it. And they want to get repaid with their interest over time. You know, that's how these companies make money. So we stepped back and we said, that's an interesting thing. Let's go learn about covenants. What do covenants do? Well, they minimize risk for these banks. Risk is an interesting thing. What can we learn about risk in lending? And so thus kicked off a journey of exploration, the best job we've ever done in trying to go out before starting a company, just learn about a problem, learn about a space. And we wanted to become really intimate with the question of how do banks and private credit lenders assess risk in making determinations around who can get a loan? And then how do they track that risk over time? Because risk is not stable. Whatever you determine as risk when you do this first part of assessing the quality of a loan opportunity, it's called underwriting, is that point in time. But over time, things change. Everything changes on a daily basis. And so when those things change, when interest rates change, or when companies fail to make their revenue targets, or when a new competitor enters a space, the risk profile of that loan changes. How do companies, how do banks, how do lenders, private credit facilities track that over time? And that's the problem we chose to dive into. And that's what led to us creating EnFi.
Yeah, and I think it's really powerful that you took such a devastating, really, I think is the way to put it, devastating moment that these founders and companies were going through and found a way to say, well, how can we prevent this from happening in the future? What can we do to solve this problem? Because it's crazy. I remember when that happened, just that weekend, it was a lot. And so I think it's really powerful that you took such a big challenge and struggle for people and wanted to be able to create a company out of it.
It's fascinating when there's a earth-shattering event, a cataclysmic event that affects intimately people in a certain industry, like to their core, to see how people respond to it. Mm-hmm. And, there's panic, but there's heroes. There's also, people who just they're like, I'm done. I have to get out. And it's rare that an event of this size happens. And the really crazy thing is there's a history of these types of events. This is not like the only time something has happened. I mean, the mortgage crisis, all of these things have happened at various times over the years, not just in banking, but elsewhere. And the amazing thing about the human kind of psyche is we have short memories. We tend to forget them the further we get from the event. The pain of the event dulls. You break an arm, in the moment, the broken arm feels like the only thing you can think of. But 10 years from now, you barely remember the incident of breaking your arm. You certainly don't remember the level of pain. And so, it's this thing where we almost repeat these events because we can't remember how bad it was the last time. Yeah. And we refer to that as like an institutional memory around these events. And it just fades over time. And so that's like an interesting secondary problem is how do you remember these events long enough to help you avoid the next time. You see the signals before they happen.
Yes, absolutely. Now, I have a question to ask, knowing that you've had started so many companies. Do you see EnFi being your last, or do you ever think that one day you could start more?
M well, you should ask my wife that question. Because I saw my last company as my last, and I think it's healthy to say this is the last company because this is the only company. This is the one I'm focused on today. I'm
Yeah.
not thinking about what else I may do in the future. I want to solve this problem. I want to build the biggest possible company that can solve these types of problems. I want to build the best company, not just in terms of revenue, but in terms of places to work. Like I'm so focused on today and to now. And now, yeah, this is the last company I'm building. Who knows? But this is all I can see. My sights are myopic on EnFi and how I build the best possible company here.
I love that. And you had mentioned something about how you have a hard time sitting still and doing nothing. And it made me think of like as you were going through these different exits, like of course it's exciting to go through an exit, like you said, all the blood and sweat and tears that goes into it. But did you ever feel like there might have been like some type of identity crisis after, or like, well, what am I now? Who am I now if I no longer have this company?
It's it's a great question. And there's a lot of people who I think won't tell you about the emotional side of starting a company and the roller coaster ride that that company is on.
Mhm.
It's funny because people are like, oh yeah, a roller coaster, day to day, month to month, year to year. No, like hour to hour inside a startup, you can go
Yeah.
from the highest of highs to the lowest of lows. And it takes a toll. It takes a toll on founders. It takes a toll on the early team members. It's a very, very hard thing to build in a level of comfort around that much like discomfort.
Mhm.
Um, and so, uh, yeah, you get into a bit of an identity crisis when you're done, right? Like you've built this incredible thing. You've gone through this journey with these, really devoted, really talented people. You've built a deeper relationship beyond just like, you work together. It's like you're in the trenches. You're really doing something that's an incredible, journey and battle. And now it's done, right? You sell the company and you're joyous and you're like, oh my gosh, like, whoo, like I can breathe. I did a great job for my investors. I built a company that built lasting value for my customers. My employees still are willing to talk to me and want to, want to see me outside of the company. Like I somehow did this unbelievable thing. What's next? Right. And
Yeah.
so, yeah, like it's absolutely like, where's my value come that I can deliver after this? And for me, after three companies, I paused. And I knew my value was spend time with my family, right? Like it was a pandemic. It was the early days of a pandemic. It was a lot of craziness. Like, what's the world going through? I just want to be home with my kids and with my wife, and I want to be focused on them. And, that was great for a little bit, and then you get a little bored. I love my kids, I love my wife, but they have school, they have their own interests. They don't want to see me 24/7.
Yeah.
And so yes, like you now have this bit of a, I don't want to say existential crisis, but you have this like, what do I do now?
Yeah.
And fortunately, I had this TBD Angels thing to, wrap my head around and to dig in on and to think about. And I wasn't the only one. I had like, there were, half a dozen or more of us who came together to build this together. But that was just an amazing thing to fill this like need of like creating something at the right time, at the right place. That's what I needed. And I dug into that. I loved that. At the same time, I took the opportunity to say, hey, we live in a house that needs a few updates. And it turned into this ridiculous green energy, green, construction technique research project for me and, really fun process as well. So you need something. You can't just like sit on a sofa, watch, soap operas, and, occasionally go out for lunch with friends. No, that's not going to fill, your need to do something productive. But as long as you can find something productive, it doesn't have to be starting another company. It can be like
Right.
many, many other outlets for that energy.
Yeah, and I think that's a good point too, is that being able to use something that you feel passionate about and making sure that you're dedicating your time towards it. So like you said, it doesn't necessarily have to be something that you monetize, but if you want to feel productive and you have things that you're really interested in, go ahead and pursue that instead of sitting around and waiting because we don't have as much time as we think we do. That's one thing I've realized is that there's never going to be enough time. And so you might as well act on what you feel excited about now.
It's funny, if I was creative at all or had any talent, I would have, built something, made something, experimented with art, experiment. If I could learn language, I would have learned. I am terrible at all of those things. And so my outlet is to think about startups and the startup ecosystem. And that's where I was able to get passionate.
Absolutely. And one question that I have for you, I guess it's kind of like a two-pronged question, but what's your advice for someone who's looking to build a startup? And then along with that, what's your advice for someone who's looking to become an angel investor or even another type of investor?
Yeah, those are like very, very, very different things, but oddly connected. So it makes sense to put those together. Look, you're a first-time entrepreneur. Everybody has ideas. Ideas are great. Don't stop thinking of ideas, but also think past the idea. Think about how I can build a company around this idea. Most ideas start as less than a company. They're a feature, or they're maybe even a product. They're not a company. And so you have to think about, how do I frame this idea in something that I can build a company around? And that company doesn't have to always be go raise venture capital, right? Like, some people build these incredible lifestyle businesses, and I'm actually jealous of these people because they build a company where they're the full control over everything that happens in the company, and like they get full benefit back, right? Like, it's this really tight circle of like, power in equals, experience out. It's like a delightful, machine. And building those companies is very hard, and those people are extremely talented in their ability to pull those off. Some companies need capital to get to the next level. That doesn't always have to be VC again, or angel investment. That can be, government grants, or it can be non-dilutive capital of other sorts. And so, building those nonprofits, that's a great company to build. But you got to think beyond what's the idea, like, how do I build that company? And then some companies need funding. And that funding has to come in the form of angel investors or venture capital or private equity or other types of dilutive funding vehicles. Those are hard because somebody else is going to measure your ability to get to the next stage based on how you sell that company, how you pitch it. And so as an entrepreneur, you got to be so good about understanding your problem, understanding your market, understanding the opportunity, understanding who else is in that space, understanding what the barriers are that are going to get you there, understanding how to build long-term value, right? Investors want some multiple return on capital, and then they want to de-risk that. So they're looking for epic outcomes with minimal risks. So you have to think like the investor and think, how do I tell the story to help them get comfortable that I've de-risked all the things that need to de-risk? Like, how can I learn everything I need to learn about my market? How can I learn who my ideal customer profile is? How can I, build a financial model around this where I can price this product appropriately and make a good return on the engineering effort and or, human effort required to get us to that product? And so there's just so many questions you have to answer. It's not building a business case, it's building a story and being able to tell that story really well. And that takes time. It takes practice. Practice it on your friends. Practice it on coworkers. Practice it on smart people in the industry. So that's the first thing I tell entrepreneurs. The second thing I tell entrepreneurs is it's rare that the entrepreneur is actually going to be the smartest person in their company. Like, your number one job is to find people more talented, smarter, and better at things than you are, right? You're a team builder. You're not the only team of one. And so think about where you need help. Think about, are you good at building technology? If not, find somebody who's better at you than building technology. Are you good at defining a product? If not, find someone who's better than you at defining products. Are you good at telling a story and going to market? If not, find someone there. Like, it's all about building a team around you that can do a better job at things than you can. And really, entrepreneurs, we're probably, good at lots of things, but not great at anything.
Right.
So that's the entrepreneurial side. And I work with literally, 100 plus startups over the years, either through investments or through advisories or sitting on their boards. There are lots of great examples of people who have crushed it. There are lots of great examples of people who have failed. It doesn't always come down to the entrepreneur, right? Like sometimes it's out of your hands. Get comfortable with risk taking, get comfortable with failure, learn to pivot. So like that's like the other side of it. On the investment side, you want to be an angel investor. Get comfortable with loss. Angel investing is about losing money. And it's playing the long game of I have a pool of capital. I've committed to trying to make angel investing work. I'm going to make a series of investments. Don't just make one because the odds of one working are very low. I'm going to spread those investments out. Maybe you have a thesis. I want to invest heavily in biotech, dealing with drug discovery. Or maybe you have a thesis of I want to invest in early stage companies, first money in, but you have to commit enough money to make enough investments to spread that risk load across those investments, because no single investment really has a good return profile relative to the risk of that. It's a portfolio strategy. The second thing I would tell angel investors is find other angel investors. First-time angels can learn so much by watching those who have invested faster than them, more than them, in advance of them. That is the greatest way into angel investing. So go find some peers and just ask them questions. Ask them if you can, look at deals they're looking at. There are a lot of angel groups out there. TBD Angels is a phenomenal group for first-time angel investors. The two great things about TBD Angels is it's filled with unbelievable peers, like both entrepreneurs and investors, and like this great camaraderie, like the who's who that you want to spend, time just learning from. And then it's also done a great job at democratizing the entry point to writing your first angel checks. It's got a process. It creates this vehicle for you to pool your money with other angel investors. And it's lowered that entry point so that really at $2,500, you could write a check into a company. That's a pretty low entry point for writing a check to an early stage startup. Again, you need to commit to a comfortable amount of money that you're willing to spend on an annual basis for a few years to build a portfolio. But that's my advice to an early stage angel investor is like, find a group you're comfortable with, learn from that group, commit an amount of money you're comfortable with losing 100% of it on. Like, don't bet on the future, bet on like learning, because it's a learning process.
Yeah, I love that advice that you shared. And it makes me think that from the advice that you shared, as well as the ventures that you started, that it seems like community is a big priority for you between what you started with TBD Angels and then also with the people that you had connected with through TBD Angels, now starting EnFi. It just seems like you've built a really solid, trustworthy, and dependable community that has helped you to get to where you are today.
Thank you so much for saying that. You have no idea how much that means to me. I couldn't agree more. The measure of a great entrepreneur, in my opinion, is not just in the returns they generate for investors, which, by the way, that's why investors invest, and that's what our fiduciary duty is as a founder of a company, is to return a multiple of capital to those investors the most we can. But the measure of a great entrepreneur, in my mind, is did the team you put together, did the customers that you sold to, did the partners that you worked with, did the contractors that you employed, do they all like you at the end? Do they want to work with you again? Do they feel like you left them off in a better place than you started with them? That is a very hard thing to go through this journey and come out the other end with. And when you do that, it's amazing. It says, you know what? You focused on the right things. You made the right decisions. Sometimes those decisions are hard decisions. They're really tough. But if you're still respected afterwards, and if you're still appreciated, and if you're still liked, that's a measure of having made the right decision along the way. The way we knew, or the way I knew that we had done that, is when I started this company, I had an unbelievable, just amazing outpouring of I want to be a part of it, reach outs from people I had worked with in the past, from customers, from employees, from partners Like, I don't care what you're doing. I just want to do it with you. And that's just a very rewarding and amazing thing to have happen. Now, the fascinating thing is I'm trying very deliberately not to build the same company over again with all the same people because we need new thought. We need outside influence coming in and helping us grow and learn and develop. And so, yeah, I work with a lot of people I used to work with, but I also work with some incredible new people who are challenging us and helping us to grow and helping us to learn. And that's the other thing I love about being an entrepreneur is always learn something new, always try something outside of your comfort zone. And so the only way to do that is to bring new thought in. And so, yes, it's about community, start to finish. I want to be thought of, I always want to be thought of as building a great place to work or a great place to be an investor in. That's very important to me.
Yeah, I love that. One question that keeps coming to mind to me for you is having started several companies now at this point, is it hard starting a company again? Like, does it make you think like, geez, I forgot how hard this was, like going from the ground up, going from the ground like all the way up? Or do you feel like, and it may depend on the company as you think about this, or do you feel like it's easy for you because it's a like rinse and repeat process?
I'll give two kind of interesting answers to that. One is it's probably not hard enough in that you have done this enough times. Certain things are easier, and there's a privilege to that ease. Like raising capital is a struggle for first-time entrepreneurs in a lot of ways because you don't have the network, you don't have the relationships, you don't have the history. Raising capital for us actually came together pretty well for this first round. It's going to get harder. Well, like first round is kind of a gimme if you're a serial entrepreneur and you've done well. Later rounds are proof based on how you're performing. So those get a lot harder. But in a way, like that hurdle to raise capital is a good hurdle because it makes you get better. It makes you improve your pitch. It makes you improve your current state, your go in, what have I already de-risked state is better probably if you have a higher barrier to raising capital. So that's one thing. It's probably not hard enough. On the other side, there's things that are still really hard. And so like take out the fundraising side, which, I'm super lucky that, that went well. It's hard for me because I'm in a space where I'm learning about new technology. The world of AI has transformed everything.
Yeah.
And if you're not using AI personally on a day-to-day basis, you're going to be left behind today. If you're not embracing AI as part of your product strategy, your customer strategy, your market strategy, your support strategy, your technology strategy, you are going to be left behind because it's going to pervasively invade every single thing we do. And so you need to learn about it, you need to embrace it, and you need to learn to leverage it in a way that works well for your business. That I love. I'm learning more in this company than I've learned in any company I've created. But it's also hard. It's like just staying up with the pace of innovation and learning how to put these new tools to use. It gets harder.
Yeah, it does. And you bring up a great reminder about just always learning. It's like, even though you've done this several times now, you're still learning and you're still being able to, as you mentioned earlier, surround yourself with people who know things that you don't know so that you can learn from them as well. And I think that's something that everyone should keep in mind, that no one will ever know everything.
That's right. That's right. And honestly, like if you think you do, like that's not an investment I want to make. I
Good
want to
point.
invest in people who know that they have a lot of learning to do because that curious, I can learn something attitude is actually a great indicator of a good entrepreneur.
Yeah, yeah, that's a great point. As we get closer towards the end of this episode, one of my favorite questions to ask our guests is what their favorite local businesses are to support. So I'm excited to hear what your response to this is going to be.
It's going to be self-serving, and I apologize for doing this, but
Self-serve
uh,
away.
I am a certified beer geek through and through.
Mm.
I love breweries. I have friends, and we spend time thinking about beer, my wife's chagrin, and talking about beer and going on beer trips. And so, one of the things I was fortunate enough was to find an incredible entrepreneur that was building not just a brewery, but a set of breweries with an approach that I felt was unique and interesting. And we spent a lot of time getting to know each other. And the result of that is an incredible set of two local breweries, but also several in Pittsburgh as well. But here in Boston, we have Remnant and Remnant Satellite. And I'm an investor and board member of the group that sits above those. And I'm in awe of what that team has built. They're producing a great product. They're producing an incredible experience. If you're looking for something amazing, go to Bow Market and go to Remnant and try their beers and get to know the experience. Bring your dog, sit out on the patio. Not today, it's like 6 degrees out. But the inside is great too. They have a great coffee bar. They're doing craft cocktails now. They have a good wine service, but the beer is amazing. The people are amazing. And if you haven't been to Remnant, definitely go check it out. It's one of my favorite businesses in the Boston
Awesome. I will have to add that to my list.
area.
Josh, this was a really great episode, and I've really appreciated having the opportunity to have you come on the show and share everything that you've been doing throughout your career. And now I would love to have you share with our listeners where they can find you online in case they'd like to connect further.
Absolutely. Well, Ashley, it's been a pleasure of mine as well. I thoroughly enjoyed the conversation. For any listeners that are interested in following up, go to on the business side, EnFi. It's www.enfi.ai. EnFi.ai, have to have AI in the domain name. And if you're interested on the TBD Angel side, go to tbdangels.com. And we would be happy to talk to you about that as well. So lots of ways to reach out to me. Reach out to me on LinkedIn as well. I'm very active on LinkedIn, and I'd love to hear from you.
Perfect. And I will link to those places in the show notes that our listeners can click through and connect with you from there. But thank you so much again for coming on today's show.
Thank you so much for having me. It was a pleasure.